Happy Monday out there, Team 42. It's your skipper here, Darius to present our macro minute for Monday, August 25th, 2025. Hope everyone had a great weekend. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk or to get on the right side of market risk to the extent you haven't been following KISS or Dr. Mo, you need to be a client of 42 Macro. So today's key macro question is, will NVIDIA earnings and or the July PCE report disrupt or truncate our paradigm C bull market? Our answer: investors entered the week still concerned about short to medium term market risk, despite Fed Chair Jerome Powell signaling rate cuts are likely coming. This is because the next market catalyst is a test of the AI-driven rally that has overwhelmingly perpetuated stock gains in recent years. Specifically, NVIDIA reports earnings Wednesday after the close. The broad market risk is that this and subsequent NVIDIA earnings releases may indicate AI investment is peaking. Thus, a cautious outlook from CEO Jensen Huang would likely trigger a rush to book gains in broader asset markets. Beyond NVIDIA, Friday's July PCE report contains key U.S. inflation data that will test the Fed's balancing act between rising prices and a fragile labor market. Specifically, the core PCE price index is forecast to rise 2.9% year over year in July, the fastest in 5 months, while holding steady at 0.3% month over month. The key issue for asset markets ahead of these events is that the positioning cycle is in an unsupportive condition if anything were to go wrong. Specifically, when we isolate the 8 positioning model indicators that correspond to the medium to long-term time horizon, markets are now breaching the level of crowded bullish positioning on a median basis that was observed at the previous all-time high in February. Sorry, let me read that again. Specifically, when we isolate the 8 positioning model indicators that correspond to the medium to long-term time horizon, markets are now breaching the level of crowded bullish positioning on a median basis that was observed at the previous all-time high in February. All told, it is important to remember that positioning cycle dynamics are not a catalyst for a reversal in market momentum. Rather, those are exclusively limited to durable inflections in the growth, inflation, monetary policy, fiscal policy, and liquidity cycles. While NVIDIA earnings and guidance and or the July PCE report may contain such information, durable and adverse inflections in any of these cycles are not our base case. If we're wrong on this view, Team 42 should trust KISS and Dr. Mo to effectively manage risk as they've been doing for years. From the starting point of a still developing bubble in AI, that would imply selling near the top to lock in paradigm C gains and truncate left tail risk. This repeatable process limits volatility drag so that our portfolios can compound returns from higher net asset values in subsequent bull markets. Refer to the chart on slide 66 if you don't understand how important this repeatable process is to retiring on time and comfortably. Transitioning to our 42 macro dashboard, as always, we'll wrap up with a question from our community. We'll just wrap up with a couple comments from our community, rather. This is a couple comments from our subscribers to sort of indicate how effective KISS and Dr. Mo have been for them along their investment journeys in terms of managing risk and helping them maximize upside capture in bull markets while also helping them minimize downside capture in bear markets, which ultimately obviously helps them sleep comfortably at night along their journey to retiring on time and comfortably. So I'll just start with the first one. It says up 20% this year so far. Skipper, one of the success stories. So, well, I'm outperforming the S&P up 20% this year thanks to KISS and Dr. Mo. Thanks to ED. High five to you, my friend. Appreciate you for the kind feedback. And then this one is titled Game Changer. Says, Darius, I want to thank you for all your hard work. I've been on the search for investment advice since 2008 when I entered the workforce and have went through various advisors with little to no success. I saw you on Thoughtful Money and understood immediately that you resonate truth backed by your research. As per your latest Around the Horn, just wanted to let you know you have taken the burden and stress off my shoulders. Definitely richer since following you, and I thank you from the bottom of my being for the work that you do. Less time worrying and watching useless YouTube videos and more time with the family thanks to you. Let me say that again. Less time worrying and watching useless YouTube videos and more time with the family thanks to you. This is priceless to me. Thank you. This, I don't know if there's anything we do in life that is more important than enriching the lives of the people we love and the communities around us. And obviously that requires spending quality time with your family. As much as I, appreciate hearing that we're making our clients tons of money in bull markets and we're helping them mitigate volatility drag and sleep soundly at night throughout bear markets. That's obviously why we, that's my core skill set. That's why we started the business. But the thing that I love hearing most is how we are changing and impacting people's lives for the better. This person is spending more time with their family and less time selfishly watching useless YouTube videos. Notice I said the word selfishly in there. Selfishly consuming useless YouTube videos, going down this rabbit hole or that rabbit hole or this rabbit hole or that rabbit hole with all the bunny ears that they can possibly put on themselves and getting nowhere. And this person obviously found 42 macro, and guess what? We are truncating the amount of time that they're spending going down these useless rabbit holes, improving the returns they're having in bull markets, minimizing the drawdown they're having in bear markets, and ultimately enriching the quality of this person's life. So that's the value add we have in a nutshell. This is 42 macro in a nutshell. This is why our attrition in the low threes, 3% range, low threes, like 3.2, 3.4%, somewhere in that range, is a third of the attrition Apple has with these things. 10% of Apple iPhone customers get new phones every year. 3% of 42 macro customers go find different investment advisors every year. So you tell me the kind of quality of research and life-changing portfolio guidance and risk management that we're offering to our customers. And super grateful for that. Super grateful for this feedback. Really, really, truly deeply moved and humbled from the bottom of my heart for this commentary, because it really does give me the fuel to work as hard as I do to create great outcomes for the investors on Team 42. So I'll shut up and stop rambling and let you guys get back to your day. Darius here presenting our Macro Minute for Monday, August 25th, 2025. Best of luck out there today. We'll catch you back here tomorrow. Cheers.